Hi, I'm Tim Kelley from the Montgomery Fund, and welcome to this week's Video Insight. Well, the market has had a difficult stretch recently. From its high in early September, the ASX 300 index is now down close to 10%, and for a lot of value investors, that's potentially good news. It's been hard to find good quality companies at cheap prices recently, and with the market pulling back, it may be that there are now opportunities emerging for anyone with some spare cash. Unfortunately, on closer inspection, we're not convinced that that's the case. If you look underneath the headline numbers to see what's really happening in the market, a couple of things emerge. Firstly, it's interesting to note that the US market, which often sets the tone for the Australian market, has pulled back much less than the Australian market. That suggests that the recent sell-off may be Australia-specific rather than part of a broader move to cheaper equity prices. Looking at it more closely, we see that the big four banks have been a significant contributor to the recent decline, and that's not surprising given how much weight they have in the index. It's hard to know for sure what has caused the big four to decline recently, but one obvious explanation is the Murray Review, which is looking like it may lead to more onerous capital requirements for the big four, which will impact their profitability in the years ahead. What's more interesting though is the decline in the materials sector of the ASX 300 index, down close to 15% in the last 8 weeks, and a big contributor to the weakness in the overall market. This is probably no surprise. The iron ore price has taken a beating recently, and the Australian equity market, through the big miners, has a lot of iron ore price sensitivity built into it. So the recent declines look to us like they're concentrated in particular sectors, and there are probably some good reasons why those sectors should decline. What that means is that the sort of high quality companies that we like to invest in haven't necessarily fallen by very much. While things are certainly a bit cheaper than they were, it may not be time to move aggressively out of cash. With that in mind, we'll keep searching for good opportunities, but if we don't find them, we're likely to keep our hands in our pockets for a bit longer yet. That's all for this week. We'll be back with more next week, and in the meantime, you can follow us on Facebook and Twitter.